All right, so in this video, I'm going to be talking about some common hurdles that we see doctors facing when they're looking at buying property. If you don't know, I'm Alex. I'm the managing partner at Voyage Financial. More importantly, from the outside, lenders look pretty much the same. They've got similar rates, they've got similar fees, they've all got online apps, but there are actually significant differences once you dig under the surface a little bit in what they will and won't allow certain types of clients to apply for and get away with. So these are the typical challenges that we see doctors face. We assist doctors, pretty much multiple doctors every single day. There's never been an application that we have put to a lender that has been declined. We just don't have that happen. Typically, we can find a solution. So let's have a go. Let's have a look through a couple of them. The first one is a low deposit or a desire to use as little money as possible. So this is increasingly the case for JMOs and even registrars wanting to break into the market. The federal government is making, or has just made, 5% deposits available to everyone. So the advantage that doctors had where they could access at 5%, that has disappeared. It still exists because there's basically no limits on doctors wanting to use a small deposit. But doctors have had access to that for several years, or for many years actually, through a number of lenders. I guess the most important differences are that there's no purchase cap for medical doctors. So if you're looking to purchase for 1.5 mil, for 2 mil, for 2.5, or even 3, we can find lenders that will accept that. You can buy two properties, 3 properties. It doesn't need to be your first home. It can be an investment. You can choose principal and interest or interest only. So while the 5% sort of advantage that doctors used to have has disappeared in the first home buyers market, the advantage still exists generally in that we can do a lot with 5%, basically anything we want with 5% at a number of lenders. Now, the next thing is just needing to borrow a little bit more. So sometimes the property that you want is just out of reach, or you've been told that your borrowing capacity is maxed out. This can be pretty frustrating because you're doing a heap of overtime, but maybe the bank that you've gone to is not including all of it. Or maybe you've only just started that overtime and your bank is wanting some sort of history, maybe like 3 months, 6 months, sometimes even longer with some lenders. They want to see a fair amount of overtime being proven before they'll actually allow you to use that for your borrowing. It can also be frustrating because your income is going to be increasing as you move into your service or training registrar years and as you move through your PGYs. So you know that in a couple of years, your income is going to be this because it's mandated, it's set by the AMA. And possibly you're earning that at the moment because you're doing all this overtime, but the bank is just not accepting it. If you're in that situation, then we can find lenders that are going to fit that. Typically, we'll look at CBA, we'll look at Westpac. All of these solutions typically involve the Big Four. They will, within those Big Four, they've got different policy variations and different things they will and won't accept. So it would be highly recommended that you talk to someone who specializes in Medico. But I guess the other frustrating thing is that you can, if you are wanting to go a little bit above what maybe a standard bank or broker has said that you can borrow, that you can just take on extra work if needed. You can do some locum work, you can do some medical deputizing. There's a whole bunch of options available to you to get some extra hours on the board and some extra income in the door. Some lenders recognize that, some don't. So a recent move into billings in a GP clinic, this is super common, or a recent switch from public to private. So this is the one that that 5% deposit sort of scenario that the government is offering for first home buyers that can't help you with. A move into billings or private means that you're now, basically, like, to set the scene here, you're now in charge of your own superannuation, you're in charge of paying your own tax, and all banks, because you are, will classify you as being self-employed. And for most lenders, that will now mean that you need to meet their self-employed criteria. But there's a big difference here because doctors aren't really the same as a typical newly self-employed individual. So normally, a bank is going to require at least 1 year of self-employed tax returns because they want to see that you've managed to get your little business up and running. Whereas doctors aren't. Typically, they're not doing that. Typically, they're walking into a well-established clinic with a line of people out the door, infrastructure, payment systems, staff, that's all set up already. And so you shouldn't be treated the same. So a doctor or a lawyer or a mortgage broker who's just started their own business, we're having to go out and find clients, we're having to quote, we're having to network, we're having to get the tools, and we're having to do all this stuff. And understandably, the bank wants to see, is this sustainable and maintainable over the long term? Where, as I said, a doctor who's just stepping into a clinic and then going on billings, it's not the same scenario. So some lenders understand this. Most will actually just classify you as a standard self-employed, and that's really not very helpful for doctors who are going from public into private, going from a hospital into a GP clinic to start their registrar years. So you need a policy that it's actually going to fit and help you. Now, if you're in this position, again, we're looking primarily at the Big Four, but they're not going to help you in the same ways. For example, ANZ can rely on only a few BAS, so business activity statements, but you won't be able to get that through their main channel. You need specifically the ANZ Health channel, which hopefully if you go into an ANZ branch, they will actually direct you to the right place, or they'll take your application and send it to where it needs to go to get to the assessors who are actually going to understand your medical income and approve it. CBA might say they'll help, but then they'll just as likely stick you into their standard self-employment bucket. Unless you're borrowing into the multiple millions and you reach their sort of like their premium client standard, then their policy changes a little bit. But typically, CBA in this situation aren't super helpful unless you're pretty much like high net worth. Westpac is probably one of the best here, and we use them a lot for this circumstance, not through the major channels though. If you go in and apply for for typically what we apply for our clients at a branch, you're just going to get declined. They can rely on BAS as well as our assurance that your income will increase over time, and there are various ways that we can demonstrate that to the lender. Okay, so the last one that I'll go through here is just relying on locum work or short-term contracts, or even hospital revenue share if you've gotten to the point where you're consulting back to a public or a private hospital. So similar to the above, we know that your income is stable and will be increasing even if you're jumping from hospital to hospital. Some lenders just get pretty jumpy at a hospital contract ending in 2 months because they just don't understand how hospital contracts work. Obviously, if you're in your JMO, RMO, registrar years, you're going, especially in your RMO years, you're going from this hospital to that hospital. The contract might only be 12 months long because you're going to be on rotation at a different hospital or a different health system. Some lenders just don't understand that, and so if they only see that you've started a contract at one hospital and then that contract is only going to go for 6 months, now you and I know that's going to be renewed, or you're going to be rotating through to a different hospital. Some lenders, they just don't like that, they don't accept it. So you've got to be really careful if you're on that type of work and we're having to use a contract to prove your income, because if there's a short time frame on that contract, then yeah, they may not like it. There, we've probably gone for long enough. If that's helpful at all, or you're in one of those situations you've been told no by a lender or that you can't borrow enough by a broker, then absolutely head to our website and book a chat. We've got plenty of advisors that would love to talk to you about achieving your housing goals.